Okay, we are recording. I actually did my job. Hey, Regina, how are you? You're muted, but I like your new place. What I see of it.
Good afternoon, everybody.
So, I guess let's give people another minute to come in. What we're talking about today is, I know it has to do with taxes. How to maximize your tax refund 101, how to maximize your tax write-offs. Okay, this is an ongoing topic for me. We're always looking for ways to maximize write-offs. We also have a guest speaker, a guy that's been coaching us on Zero. That's a new platform that we've been using. We put Bedrock's books on it, and it's an amazing tool. And that's what I like about it. It actually does accounting, which is hard to believe, because to be honest with you, all of the programs out there, and I'm only talking about the ones for small businesses. We could start with QuickBooks, but and we can end with Wave, which we still use, but none of them are really accounting programs. Okay, QuickBooks is not an accounting program. You can do accounting with it. You can get accurate financial reports. It could be a valuable tool, but a long time ago, decades ago, they stopped actually worrying about doing accounting. It was when QuickBooks came out, it was actually a lot like Wave, only without the internet bank feed stuff. It just did simple bookkeeping. And that's all most businesses need, is simple, basic bookkeeping. Okay. Not only that, the real issue is that when we log into these subscriptions now, QuickBooks Online, Wave apps, they're all trying to sell you something. There's all kinds of pop-ups, and it's really it's almost a conflict of interest, because the software becomes and you can't even turn it off most of the time. I know Wave Apps was bought by H&R Block, and all you see all day is, if you're logging into it, because we do, because we're the accountants, we don't like when our clients go in there, because of the pop-ups and the fact that H&R Block is trying to sell everybody their accounting and tax preparation services. Now, the only problem with going to H&R Block through Wave is they're not going to be doing accounting for you. All they want to do is they're going to link Wave into their own tax software. It's very, they did a smart thing. I mean, if I was H&R Block, I would have either started my own bookkeeping company or bought one a long time ago. So I don't know what took them so long, but I could see that Wave Apps is becoming just like QuickBooks did. They're more interested. They're actually a bank now. One of the most profitable businesses you could ever be in is being a bank. It's like you have literally a license to print money. Okay, now I didn't want to make this about an economic lesson, but the truth is, and this is a good segue, the way you create your best tax return, you maximize your tax write-offs, is all about being organized. I know Regina knows how to be organized. We should do one of those, what are the reality shows on how Regina keeps her bucks, because even though they're paper, she could put her finger on anything. And I've been there, I've asked her for stuff, and it's right there. And that's really how your taxes should be handled. Okay, I think people, because most people, and a lot of you are students, but most people are afraid of numbers and they're afraid of money. So there's this fear factor, and what they don't see, what they don't understand, it's like they could hide from. And I want to ask my friend Susan, because isn't that like a fundamental problem that people have, not only with money, but with themselves?
Well, people have anxiety about, in general, most people have anxiety about a few things. One is public speaking, one is handling money, one is math. And then there's a few of us weirdos who like math and like public speaking and like money.
Well, we all like money. I think people that like math are actually, and this might be wrong, but I think we're a little bit more organized. And when you think about that, all of this, it's just because I've been doing it for so long, and what I teach my team and clients that let me, it's really not that complicated. Some of the tax laws are complicated, but actually organizing your books, organizing where you stand with your taxes is really pretty simple.
It's incredibly easy when someone else does it for you.
Or you're given the right directions, because nobody could do everything for you. Okay, and that's the struggle.
But if somebody does, if someone is doing your bookkeeping for you and they're doing it accurately and giving it back to you, it makes your life so much simpler.
Well, you could see what's going on. And I think a lot of the fear is people don't want to see what's going on. I can't help them with that, but you can.
There's a lot of truth in that, Joe.
You should put your link in there. Susan is a relationship coach, but really, I think she focuses on the relationship you have with yourself. Okay, and so Susan, put your book in there, your contact info. I highly recommend talking to Susan, because then you might be able to get, believe it or not, indirectly, you'll be able to get control of your finances and your money. And so who is this for? Who is this not for? Probably if you're here, it's for you. Okay, it's for people that want to stay in the loop, be active. Like I was telling George before we started, just the fact that you stay active. We do these workshops every month, and a lot of it is the same info, to be honest with you, but we have to keep reminding ourselves and going through the habits, the procedures, and if that's what you want to figure out. Also, if you want to learn some really cool tax write-offs that a lot of people don't know about. So you're going to walk away with, hopefully, you're going to have some of that anxiety put behind you. If you're a student, so if you're one of my students, this is what we teach our clients. This is what we want our clients to do. And this is what we do on a regular basis. We try to teach our clients, we teach ourselves. We're always improving, sharpening our skills, and we like to guide people. Like Susan was saying, we can't organize your records. We can't access everything. You have to be a participant. But if you follow our simple suggestions, we can guide you. Okay. And then another thing that's important is you got to know what you want. And then again, Susan isn't paying me for this, but she has a business called Getting What You Want. And so the whole relationship thing is you're figuring out what it is that you want. And if you want more cash, I'm going to give you some actionable ideas on what you can do. Really, it's not so much, and we're going to talk about this, it's not so much of getting a tax refund, it's keeping control of your money. Okay. And at the end, my favorite tool, I'm going to tell everybody how to put fear in the minds of an auditor. If you're ever unfortunate enough to get audited, but if you have this, you won't really have to worry about this. So yeah, I like to imagine stuff. Imagine not having stress about the IRS. And I still get a few seconds of panic when I get a letter from the IRS, and I get them almost every day. But you never know. It's the panic, the fear of the unknown. I'm like, oh shoot, did I forget to pay my payroll taxes? Did I do? But I don't really stress about it. Okay. Wouldn't it make you feel better if you freed up some of that cash that you might be paying to the IRS? Okay. Think about the next trip you could go on, Regina. The next vacation. And I'm going to tell you how we could put cash in your pocket. Now, I think everybody knows me. I don't see anybody that doesn't. But you know that I've been doing this for a long time. Actually, I wrote this, we should change this to 40 plus years now, because I'm getting older. Worked with a lot of people. And basically, it always came down to organizing their books, informing them, staying in compliance. That means, doing all these little odds and ends that the government forces us to do. And then sometimes going to war with the people, the big business, the government, when we don't fit into their little boxes, or they want to put us in a place where we don't belong. If you're trying to get financing, if your landlord wants to triple your business, your rent, and you have no heat in the building, that's what we do. I love to help people, teach, and absolutely save them money. Okay, so usually, and I just changed this, it's how to get the best refund possible. But I was thinking about that because what I tell people that get big refunds is all you did was you gave the IRS a tax-free loan. And then if you see like what happened in COVID, my aunt had to wait over a year to get her refund just because of COVID. Now, if she had listened to me a long time ago, she wouldn't be overpaying. But for her, it's like a forced savings. I don't know about you, but I'd rather have the money.
So Gerald,
Yes.
it used to be that you could increase, and say you had more dependents so that they would take less taxes out of your pay. And I heard recently that they check up on you to see that you're only putting an accurate number of deductions in so that they can take more of your money. Is that true?
Yeah, actually, so we're going to cover that on your withholdings. But you see, as the person that actually runs the payroll, I'm not doing W-4s for my clients. I'm not doing a W-4 for Regina. I know what her tax status is. And we have clients that will do a big bonus at the end of the year. And I determine what the tax withholdings are. See, what you're talking about is when somebody goes and has a regular job, they don't have a business, and they
Right.
want to claim, you used to be able to claim 40 dependents.
On 10 at least.
Now they cap it at 13. And what they started to do was, and this is part of closing the tax gap. That's why I say this didn't just happen. This has been evolving over decades. About 15 years ago, the IRS identified people that had jobs, but every year owed money. And then they would disappear, they'd ghost them, and now the IRS has to try to collect. So they went back and said, listen, you can't be making $100,000 a year and having $1,000 taken out in your paycheck. We want to see your W-2, and then they put it on the job. So the boss will actually get the letter saying you can't give him, 10 dependents. So again, that's another example of the IRS making us their unpaid police department. And when I say us, I mean accountants and business owners. So now we're actually involved in somebody else's problem. But there are, ways to, and you're not breaking the law. You're not one of those people. If somebody was an employee of one of my clients, they have to fill out a W-4 form. That's what the IRS says that we have to do. Okay. But really what I like to help my clients manage their money. That's what accountants do. So I do have some simple strategies that everybody can follow. Number one, you should know what's on your tax return. So many people, they just sign their tax returns, don't ask me any questions. They just assume that I did it right. But I'm going to show you the actual forms today. I'm going to show you how we do it so that it'll make it easier for us to do our job. So if you know what we're looking for, if you know what's actually on your W-2, because listen, maybe I shouldn't talk about my kids here, but I don't think they know what's on a W-2. They know there's numbers on there, how much they made, but all the numbers on there go on a place on your tax return. Federal withholding, state withholding. Okay, your Social Security might be a factor. Okay, pension plans, if you have any other deductions. Okay, don't assume, like even if you have a pension plan at work, don't assume that the company is calculating it correctly. There's mistakes made on payroll tax returns all the time. All the time. The thing is, the Social Security Administration, who really, they're part of it. They have a vested interest in your W-2, so they get a copy. The IRS gets a copy. And it's been like this for decades. If there's a mistake, they're on top of it. It's not like the regular Internal Revenue system. Okay, because it means a lot. If somebody's not paying their payroll taxes, if the W-2s are wrong, they're on it. They're on it right away. Now the IRS, if there's a mistake on a return, they could take 18 months, 2 years sometimes. And sometimes they don't find them, and sometimes they find mistakes that they make up. But either way, this is a moving target, whether you're a business owner or an employee. Okay, if you're not looking at your return, another thing, we do a tremendous amount of amended returns. People that either did their own, most of them tried to do their own returns, but a lot of them are coming from accounting firms. And why is that? There's a bunch of reasons, but I think primary is the fact that a lot of the accountants out there don't even do accounting. They're entering data. They take people's information that they never talk to. They're entering it on a computer screen. They're not asking any questions. The person who's getting their taxes done doesn't know what to ask. And that creates a lot of confusion, a lot of mistakes that can be avoided. So if you know, and it's not that complicated once you look at the basics, and that's what I want you to leave with.
So
So
Joe,
your personal return, you're gonna interrupt me again, Susan?
I am because
I can mute you, you know. Okay, go
you're
ahead.
having a guest speaker who has a time limitation.
Is he here?
I don't know. I just was
Hey,
informed.
Joe.
Hey, Logan is here. Okay. Are you ready to jump in here, Logan?
Yeah, I definitely can if it's a good time for you.
Okay. Yeah, before we get into the tax stuff. So Logan is our, I'm gonna make you a call. Do you have a slideshow or something you want to show, Logan?
I do, yes.
Okay. So Belle, can you help me out here if you're there?
Yes, hi Joe.
Can you, yeah. Oh, there we go.
Mm.
Perfect. Hey, everybody. Thanks for letting me crash this meeting. And thanks, Joe. This is really good to listen to for me as well. Good info. I am Logan Duckworth. I work with a company called Xero, Xero. It's spelled like Xerox without the last X. If you've never heard of Xero, we are a cloud-based accounting software. And so I'll jump into a very, very quick presentation, and then I want to show you just a little bit of the software. So again, if you've never heard of Xero, a cloud-based accounting software, and that is one of the things I want to focus on, is that we are a cloud-based software. We were built in the cloud, so we've never been on desktop, and that means that you can access Xero from anywhere in the world, as long as you have a mobile device, a tablet, or a computer, and you can access the internet. That's really helpful for businesses who are on the go, who are making purchases in the field, who are billing customers in the field. You have the flexibility to be able to use your phone, which is huge. We have best-in-class data protection, so you don't have to worry about your data being compromised. We also connect with bank accounts. And so if you are banking with Chase Bank or Bank of America, or even small local banks, we can connect with your bank accounts. And so all of your transactions are pulled into Xero for Joe and his team to reconcile bank accounts, categorize transactions, and even request more information if him and his team have questions. 24/7 award-winning support. So if you ever had a question about Xero, there's always somebody there ready to help you. And another thing, real-time collaboration. There's no more waiting until the end of the year or an end of a quarter to reach out to Joe and his team. You have they have access to your information real-time, live, thanks to the different tools available within Xero. One of those being what we call the live bank feeds that I just mentioned, connecting your bank accounts to Xero and allowing Joe and his team to see what is going on with the business live in real time. And then also a tool called HubDoc, which allows you to take photos via a mobile app of all receipts, bills, invoices, things like that occur. And as soon as those pictures are taken, Joe and his team immediately have access to them. Not
Yeah,
only do
can
they have
you,
access,
so
yeah.
I'm sorry, Logan, but I want, you know, this was one of the features that I really love about Xero, because I was actually looking for this for my clients. I was looking for some kind of simple app where they could just take a picture, upload it on their phone. And can you go, because I know some of the features, maybe you have a couple more. I know that it comes with an email, so I could, when I get an invoice through my email, I just forward it to that. It goes right into my file cabinet.
Exactly. There's several different ways to get documents in. Like Joe mentioned, you can customize an email address and then save that email address. And anytime you get a document, just click forward and it'll go right on into the document portal, we call it. You can use the mobile app that I mentioned earlier. So when you're in the field, just snap a photo. You can also do a traditional upload, just like you've attached any file to the internet in your life. And there's also something called a direct connection, which I won't get into, but the email address and the mobile app are the most popular ways to get documents in and allow for that real-time collaboration between the accountant and the small businesses or individuals. A few of the problems Xero can solve, again, not an all-inclusive list, but the first and foremost, one of the most popular reasons folks use Xero is it eliminates the paper mess. There's no more need for storing years or months of documents, again, because of tools like HubDoc. There are a couple other tools that can help with that as well in Xero, but HubDoc definitely the most popular. It also gives you confidence in numbers because all the data is live and up to date, and there is supporting documentation behind all the numbers. You can have confidence that those numbers are correct. And then again, timely insights. There is a whole lot of value in being able to have that live up-to-date data because the insights you're receiving are not backward looking by 12 months. It's live and up to date. You can see what happened this month right now due to the tools that allow for those live insights. And then finally, there's allows for clearer financial and tax positions. So fewer surprises when this time of the year rolls around. And again, that's because the live data allows for better tax planning. You can make more accurate quarterly tax payments if that's something that your business does. So I'm going to go ahead and hop on into Xero to just show a few of the features. The first that I want to show is how easy it is to run an income statement. So the bread and butter of most businesses, again, how much money are we making? Where are we spending our money? And so all you have to do is run a P&L. And there are some basic common formats that you can quickly view. If you create a budget within Xero, which you can do, you can quickly click on the budget variance and you can define your date range. So we're looking at January's budget, and you can see how the business performed versus the actual budget. And you can see what the variance here is. So all that took is one click, and you can see the budget versus what actually happened that month. If you want to see what makes up the balance of the income statement for every month of the year, you can quickly do that just by the click of one button as well. Again, we're just in January, so there's only 1 month here, but you can imagine how useful this would be when the fall or early winter rolls around.
See, but
lastly,
this is what I was saying. This is real accounting data. I can't get these kind of reports in QuickBooks. They got all kinds of reports. Most of them I don't need, but a lot of times in QuickBooks, you're trying to, at least me anyway, trying to customize and tweak what they have. And it's really, really difficult. So this is really great. The other thing, Logan, a lot of issues we have is with classifying transactions. And that means when I look at a P&L, we have a lot of things in uncategorized. But going back to that HubDoc thing, I think if we have our clients on that, that becomes less back and forth. Okay, because we would be able to see the invoice, the bill for that. We know where to put it. And that gives us, I don't know where something belongs when it's in uncategorized, but it's nice when I get a clean P&L. And then I could do those comparatives, and it's really valuable.
Yeah, absolutely. Thanks for that, Joe. Two last things I want to leave everyone with is how easy it is to review the P&L as well. If I'm looking at this right here and $2,500 of advertising expense seems high, maybe it's December of this year. I don't remember what this charge was for. I can just open this really quickly and it will list out every transaction that makes up that amount. And then I can even click on those transactions. So in this case, it's just one. And if I'm using HubDoc, you'll actually see a copy of the exact bill or receipt that was submitted along with this transaction. And so another thing it's doing is it's really audit proofing the books. If the IRS were ever to come knocking at the client's door for an audit, you would be able to quickly get through that just because all the supporting documentation is attached within Xero. Last thing is within Xero, there's so many different reports you can run, and you will start to see more and more of this, but we're adding graphs to our reports. And that is just an easier visual for you to look at. For example, here, we are looking at a bar chart of the 10 highest vendors that we're paying. So where we're spending money at most often. And you can see that advertising agency is actually number one here. And there's just different formats we can run. If we want to see this as a pie chart, we can run it as that as well. So very useful, easier. A lot of people are visual learners where looking at a list of numbers isn't going to make much sense. But if somebody sees this, they can very easily see where they're spending money at most often.
Yeah, I can't wait to start looking at the pie charts on Bedrock. I mean, yeah, I'm a numbers guy, but just seeing it in a picture really, when we do our KPIs, when we have our meetings, we're just throwing numbers out there. It's hard to visualize. So this is really good.
Yeah. Well, I could spend the whole hour talking and showing different features of Xero, but thanks again, Joe, for the invite, and let me know
Yeah,
if any
anytime.
questions come up.
Thank you. Thank you. So I guess I got to go back to share my screen. All right, you know what? Let's do this. I'm gonna, because we're doing the personal tax return. Let me share with you some of the things that the IRS is saying that we should be doing. Okay, can you see my screen here?
Yeah.
Yes, okay. So I get emails all the time from the IRS, other industry publications, so that this is how I stay on top of what's actually going on. The IRS gives us really good insight into what the problems are, the scams out there. There's a lot of scams. It's like every week we're getting more alerts about scams, and why it's important for us to, protect our clients' data, and just tips like having double authentication. That's a big one. I had a web designer once that hacked into my PayPal account. And it's because he got my social security number from my computer, and that was my authorization, my double. So yeah, that took me a month to get the money, even though I knew it right away. It took me a long time to get the money back. And I know I've had clients, people that had their identity stolen. It's not a fun thing. So this is some of the IRS's tips for this year. I don't know, we had a client, I think we dropped him. He was filing his returns on paper. Okay, if you're doing a client's return, you don't want to send it. You don't want to send the paper return for a couple of reasons. Number one, there's no guarantee it's even going to get recorded. It's just, yeah, paper is a thing of the past. Sometimes, like right now, the IRS only accepts 2 prior years. So right now we can do 22, 20, and 21. And we do get a bunch of returns that haven't been filed yet, and we got to send it via paper. And I'm getting, or if my client's mailing it, we're asking them for proof of mailing. So any return, if it's a payroll return, anything, you don't want to file it on paper. The IRS actually has a free file for if anybody has a really simple return, which I don't even know if those exist anymore. To be honest with you, there's all kinds of stuff. Even if you get somebody, a waiter or a waitress, and they get a W-2 and they have tips, there's a whole thing. If you miss it, you're gonna mess it up. Social security numbers. Okay, I don't think we've ever in Bedrock, we've ever had a problem with social security numbers, but we verify them. Okay, make sure that your social security numbers are right. Misspelled names. Okay, inaccurate information. So this is the kind of stuff that triggers tax audits. All these little things, because the IRS, you're looking to put your return in and let it go through the system. Just let it go through it, make sure everything's correct. Every time there's a hiccup, a wrong social security number, the computer pops out a letter because it's all computerized. But if your return keeps getting popped out, the IRS has analytics. They had them before there was Google. And they say, oh, if this person keeps making this kind of mistake, what other mistakes are there? And they want to see the return. Okay. Filing status, very, very important. Okay. We go through this when I teach my students. One of the things, and our team members, is we got to talk to our clients. Filing status is not always that simple. For instance, you could have your client could be a head of household. What does that mean? That means you're providing more than half the support for a dependent, and the dependent does not have to be a child. Okay, it could be a mother, it could be a grandmother. Okay, it could be your brother-in-law, and you're trying to get him out of the house and nothing's working. But at least you can claim him as a dependent. It could also be a grandchild, Susan.
They don't live with me. None of them live with me.
Okay. Math mistakes. Again, if you're doing it on a computer, that's not going to be a problem. Make sure you're getting the right credits, right deductions. This is a big one, okay? Because if you're having your money directly deposited, last year I left off a digit on a client's tax return. I just left off a digit. And luckily we got the money. It was like only a week. But you know, verify your bank info. So for us, the best way is to just take a picture of your check and upload it to your portal. This way we see it. If you write it out, there's just more chance for errors. You could transpose a number. If we actually have the check, we can enter it and then we double check it. Okay. Don't ever send in a return that's not signed. That actually gets bumped out to a person. You don't want people looking at this. Every time your return gets looked at by a person, they could say this should be audited. They might see something strange, okay, but they'll send it to audit. Now, this is a big one, and I get bombarded from the IRS with, apparently there's a lot of bad tax preparers out there, a lot, because they talk about it all the time. They have links to tax preparers that were banned, okay, suspended. They can't, but people don't know this. They'll go to a preparer because he always got them a refund. Well, again, that's not a measure if somebody's a good accountant or not. Okay, so if you have, and you know, if you're a client, we're doing your return. If you're a student, you have clients that are probably going to other tax people. There's ways to verify if somebody's legit or not. If they're a CPA, you could go on the state professional website and check that their license is right. If they're an enrolled agent, you can actually go on the IRS website and find all the enrolled agents. Okay, that's one thing. Okay, And just to, this was another email I got today, choosing a tax professional, Directory of Federal Return Preparers, okay? What happens is when you get these criminal tax preparers, it disrupts the system. They're helping people commit fraud. They're filing frivolous returns. I mean, if I told you some of the returns that I've seen from other accounting firms, it's really criminal. And so there's the actual criminal preparers, and then there's the incompetent preparers. So I thought if we just go through an actual 1040 return together, it'll make things a little bit easier for everybody to understand. First up here, we have the filing status. Okay, some of them are common sense. If you're single, you have no dependents, you're not married, you're single. Married filing jointly. That's a decision. Both spouses have to say, I want to file jointly, because they both have to sign the return. Okay, if you're a preparer and you need to get form, I think it's 8679, Catherine, is that it? Or if Liz is here, it's the signature. It's the signature page. It doesn't go to the IRS. It goes to me. I have to save it because the IRS actually audits accountants. And they want to see that everybody is signing their returns. So that's how they sign it. Usually there's a federal form and there's a state form. Okay, so if you're a client of mine, we don't just ask you for this, you know, because we have nothing better to do. We need it. We need it. And I do know accountants that have been visited by the IRS. It's never fun when the IRS shows up. They never come with a check. Okay, name, social security number, home address. I see this, I'm still seeing it. You're not supposed to use a PO box. That's only if you're like in the mountains of Alaska and no post office even goes there. Okay. I never do the presidential election campaign. I don't know why it's on a tax return, but that's another thing. Digital assets. Now, this is important because this is how they're going to start tracking things like Bitcoin. Okay, they want to know if you have it. If you do, there's no reason to say no. And even if you don't, saying yes isn't going to do anything. What's going to be a problem is if you say no and you actually do own crypto, because most of these, it's not anonymous. It's not anonymous anymore. And I'm not a crypto expert, and I know it's got some kind of number, and if you lose the number, you lose the coin. But the IRS is tracking it now. They did it through the Securities and Exchange Commission. All these things you're going to have to give them all your social security numbers. And if you own digital assets and you say no, only bad things happen. Okay, so that's not good. Standard deduction. Okay. Standard deduction. This is my research tool. It's called Google. Okay. I laugh about this because even when I'm doing IRS research, I'll do this and I'll look for the IRS link. Believe it or not, Google finds where it is in the IRS better than the IRS does. Okay, so most of the time I'll just put in what's the standard deduction because they raised it. Now it's $25,900 for a married couple, $12,950 for a single. What does that mean? It means if you're single, you're gonna get almost 13,000 written off against any of your income here. That means you can make up to $12,950 in a job and you pay no taxes. So you either take the standard deduction or the itemized deduction. You have a choice. Itemized deductions, so what they did was they raised the standard deduction and they made it harder to take itemized deductions. Itemized deductions are on Schedule A. Now, what happened is they made it a lot harder by raising the standard deduction. They made it a lot harder to qualify as an itemizer. If you see here, medical, you're limited. If you make 100,000, the first 7,500 is eliminated from your deductions. Okay, so you need to have a lot of medical for any of it. State, local, and real estate taxes, they limited it to 10,000. So for people that live in California, New York, high tax states, this was a big deduction before. Now you're limited to only 10,000. The only thing that's really left is if you have a big mortgage. So if you have a big mortgage, you're paying 10,000 in state taxes, and I think for a married couple, it's about 26,000. This would have to be more than that. Also, any contributions that you've made. So that has to add up to more than what your standard deduction is. Right now, we have very few people that itemize. It does make things a little simpler. Okay. So income, this was another thing that was sent to me about income. Everything is income, including stuff you don't get in cash. Okay. Somebody pays you in Bitcoin, it's income. Whether it's reported or not. Okay, this is important. Believe it or not, last year I signed up with this thing called Coinbase. It was a crypto exchange. And I took, like if you take a course, they gave you some coins. And I wound up getting $40 worth of coins. Do you know they sent me a 1099? Because that was considered income. Okay. So if you could see here, basically, so if you want to know if something's taxable or not, go with the idea that if you made money, it's taxable. And I'll give you another example. A client of mine, he's partners with somebody, made a good amount of money last year. They decided they were going to take $400,000 and buy a rental property with their profits. So my client got half ownership in a rental property. And him and his partner, they didn't understand why my client would have to pay tax on that. In other words, instead of getting the $200,000 cash, he got a $200,000 interest in a rental property. So if you're lucky enough to get something, but now, yeah, anyway, I didn't handle the transaction. The guy has another accountant, but the problem is he took profits, bought a piece of property. Now he's got to pay taxes on that profit. He's still got to pay taxes on it. All right. IRA distributions, when you become 70 and a half, you actually have to start taking your distributions. Okay. The good news is if you're still working, you could still make tax deductible contributions. Okay. So we come up to your income. Now we have the adjustments. Adjustments are, that's on a whole nother schedule. I'm not going to go into details here. I just want you to get an idea of what's going on here. Other income, that would be if you get a K1 from a partnership, your business, Schedule C income. Okay, and then we come down to your taxable income. Line 15. Now, if you're doing this on a computer, the computer's doing it all. If you're taking one of my classes, I explain to you, don't rely on the computer. Don't rely on the computer. Look at this. Okay. Even if we're doing your return, I want you to look at the return. We've made mistakes. Sometimes I find when I look at, because when we do this year's return, we're going to look at last year's return. If I find a mistake on last year's return, we're gonna correct it. But don't assume anybody is going to be perfect doing this. Nobody is perfect. We try to minimize mistakes as best we can, but a lot of it has to do with our clients and the line of communication that we have. So for our students, you know, I talk about that triangle, you know, the relationship that you have with your clients. That's always key. Okay, that's one of the reasons why we do these workshops every month. We have client meetings. It's because we want to know what's going on with your personal life. Not so much your personal life, but believe it or not, sometimes people have children and they forget to tell us. You're laughing, Susan, but you know, when you how are we supposed to know? We might talk to the client once a year, okay, or they move, or they switch jobs. All of these things, you know, happen and they matter. So you got to have, and this is why I tell people you can't go to a tax preparer. A tax preparer is somebody you take your info in, you sit down with them once a year, and they're really just data entry clerks. Okay. So this was one of the forms when I said, let me call this up. So a W-2 has a bunch of boxes. So I want to show you what the important ones are and what's not important. Can everyone see my W-2 here?
Yep.
Okay.
Well, it's kind of blue now. That's better.
Yeah, I don't know why that's happening. Okay, so what's on here? Your social security number, your employer's ID number, their address, your name and address. Make sure this is all correct. Okay. Box 1, that's where your gross wages are going to go. That's what you're paying taxes on. Box 2 is what's been withheld. And these other boxes have to do with Social Security and Medicare wages. Okay. Down here is your state wages and state income tax. That's the bulk, that's the crux of everything. So when you look at, if you have one job, all you got to do is look at box one, make sure it equals what's on your 1040. Okay, that's simple. The withholding, you want to make sure it's on box 25A. These are simple things that you could check to make sure that your returns are correct. These are simple things that we do when we're preparing tax returns. Does anybody have any questions? I didn't get into the fun stuff yet. So also, it's not just, yeah, so if you get a retirement check, if you're getting a pension check, it's the same, you're gonna have the same boxes. Also, you might have 1099s with withholding. Okay, so you got to be careful when you submit your information. Check that. Check if there's any federal or state withholding, and then double check it on your tax return. All right. So creative tax write-offs. I'm just going to tell you a couple. I don't have any slides on them, but it's pretty common, but people don't always take them. Number one, office in the home. It's a moot point right now that almost everybody has an office in the home. Okay, now Regina actually has a physical location. She meets people there. That's obviously a tax write-off. But I would be surprised if Regina doesn't go home and do something on the computer in part of her house, and we could take part of that as a tax write-off. It's simple. Okay, normally we have a spreadsheet. I just put in what's the square footage of your home, how much of it is used for business, and now you could write off that mortgage interest and real estate taxes that weren't a tax write-off. Now it's a business write-off. Your utilities. Okay, and it's not going to be tens of thousands of dollars. Okay, but if you take enough of these, and it could be, you know, thousands of dollars, it could be thousands. Okay, maybe Regina has a storage shed in her back that she's putting all her inventory in. Well, that's business use. Again, that's something that I've never seen accountants really get into, asking their clients, but I make a habit of it. If you don't have a spreadsheet, we could take estimates. Estimates are legal, but I'd rather have a spreadsheet because it becomes part of your books and records. Okay, writing off your kids and your relatives. I talk about this all the time. Okay, if you're in the right situation, if you're in a high tax bracket, okay, which is over, so the payroll taxes you would have to pay to put somebody on payroll, let's say it's 18%. Between the cost, you do have to have workers' comp insurance. But if you're in a tax bracket that's more than, let's say 20%, and I'm talking about federal and state, okay, you could save a good amount of money, and you're sheltering income, because a single person, if it's a child or somebody else, they could make up to almost $13,000 and not pay any income tax on it. Okay, so it makes sense. It makes sense. Health savings accounts. Okay, I don't think I have any clients with this, but it's a really good write-off Because what happens is you could put money into it and there's limits based on what your salary is. But I think it's about up to $5,000. You could put into a health savings account. It becomes a tax write-off. And then you pay for your medical out of the health savings account. It's not complicated to set up. It's simple. And again, you're going to get a tax write-off for it. Now, if you have employees, you'd have to cover them. But if you're a single owner shareholder, you can do it. Like my cousin, her son is 10 years old. She could, and you could buy over-the-counter drugs too. Okay, so that's a simple one that most people don't take advantage of. Retirement plans. You could set up, I just had 2 clients set this up, a SEP IRA, simple employer pension plan. You could deduct up to 25% of your salary. So he got a big bonus this year, one of my clients got a $200,000 bonus. Well, we set him up with a payroll. We bonused him. You know, the money came in as a commission. We put 120,000 as a salary. Okay, because now he could take 30,000 and put it into a SEP IRA. So he's going to save about $6,000 by doing that in current taxes. He'd have to pay another 6,000. No, actually 9,000. It's about 30% he's saving. Yeah, we've talked about expenses that pay for themselves. Also, maybe I should talk about the de minimis rule, which means, you know, a lot of times I'll go for gas and you're paying less if you pay cash. Okay, I'll fill up my car, it's like $50. I need a way to record that. Okay. Now, I could have, if I was really organized, I would have like my diary here and I would put down all the expenses. I'd give it to my accounting team. Or I could just say, whenever I take $200 a week out in cash, $50 is for gas, $30 is for stamps, and you just use estimates. Okay, so if you have cash withdrawals, a lot of times it's hard to account for those things. You don't remember, you don't keep track of them. You're not keeping all the receipts. Okay, but if it's under $75, you don't need a receipt for it. So all you got to do is keep track of it. And when I enter it into our accounting program, I'm basically documenting it. So I'm taking, I can either take $50 in cash out and say that's all for gas. I could take 200 out and separate it into smaller expenses that are under $75. Okay. Also, what people forget is when they start a business, and I had a slide here for starting a business. If you don't have a business, you should start one. Okay, because right away, you get tax write-offs. And unfortunately, a lot of people that have had hobbies now are being classified as businesses. Like my mother, like my son-in-law. Why? Because they created this crazy new role with online businesses, eBay, PayPal. If you do more than 600 a year in business, they're going to give you a 1099-K. Okay, it caused a lot of confusion, a lot of problems. The IRS decided to put it off for a year. Let everybody, you know, get used to it. Because a lot of people, you know, if you're sending money to your kids through Venmo, or something like that. There's a chance it'll get classified as business. Believe me, it's just, it's a moving target. So when you're paying somebody now, somebody's going to have to determine, is this for business or is this personal? And it's easy to make a mistake. It's too easy to make a mistake. And I think that's why the IRS said, we'll give this another year, because the technology, it's up in the air. And then you have a problem with, and I think I spoke to Regina about this, when you're paying somebody, you got to keep track of, did I pay them through PayPal, Venmo, or did I write them a check? Because if you're paying them through PayPal or Venmo, they're already going to be getting a 1099. And then there's going to be a problem with duplication. This has nothing to do with saving money on your taxes. But it does have to do with, making sure you're all good. Now, the reason why I brought up starting a business, as soon as you start the business, you start getting tax write-offs. As soon as you start, all you need is an idea, and then you have to take action. As soon as you get in your car and you go to Staples to buy some office supplies, that becomes an expense. So when we get people that are starting a business, we have to determine, when did it actually start? Because that's when you want to start documenting your expenses. So I think that's all we have on the content. And let me
No,
just see.
I'm sorry to interrupt. I think we have a question coming from Regina.
Okay. What's the question?
Yeah, it's in the group chat. She's asking, what about payments through Zelle?
Yeah. So all of these platforms, Regina, all of them, they're all going to have to comply with the new rules. The current rules are, it's got to be over 200 transactions and 20,000 in sales. Then you get a 1099K. But now it's going to be $600. And yeah, Zelle is one of them. I don't know how they're going to internally, because they're the ones that are going to have to issue the 1099s. And like on PayPal, if you send something, I think friends and family, it's easy to send somebody, because I think they don't have to pay the fee, or somebody saves something on the fee if it's friends and family. But the IRS is going to be monitoring that. If you have somebody that's sending all their money through friends and family, they're going to say, hey, I think this is a business. So you're going to have to, pay attention.
Now, the new landlord asked for payment through Zelle. So that's why I didn't know if that's,
Well, the landlord, you got to get a W-9 from him.
okay,
Well, actually, if it's through, you see, this is where the confusion comes in. If you pay your landlord, that's one of the things that people get a 1099 for, rent. You're supposed to report it to your landlord. Mostly never do it. It's like one of those things but now if you're doing it through Zelle, he'll get a 1099 through Zelle.
okay.
Yeah, we're just going to have another category. How did you pay these people? Again, it's like the IRS makes us their unpaid police force. Any other questions? So wait, what do you have, Regina? Oh, you are using your garage. Okay, remind me this year when we finish your business return. Any other questions? Okay. So let's just go through, if you don't know what the CFO package is, it means that you get all-inclusive support. You don't get one accountant, you usually get two accountants, they support each other. It's like having your own accounting department. We're always looking at where do you stand with your taxes, things that are coming up, if you have to move your business, anything tax, accounting, business related, we are here. We charge one low monthly fee. These are some of the benefits. If you're a client, you have firsthand knowledge. And also, this is most of our new clients come from referrals. And so we actively ask for referrals. We're always looking for new clients, and it's pretty easy to send somebody to us. All you got to do is ask them to go to Time with Joe, mention you. We know where all of our clients came from, and we'll set you up with our affiliate program. Also, Belle, if you could put the link in here for our YouTube channel. We're up to like 940, I think. We only need 60 more. And I don't even know what that means, but you get like some kind of special award if you get 1,000 subscribers. And connect with me. That's it, folks. Any other questions, comments? I want to thank my accounting team for showing up. Rowena, I got your message. Thank you. That was nice. Lee, it's good to see you. And Raymond's iPhone. Raymond, we miss you. We miss the masterminds, but we're starting up a special mastermind group for accountants, but you would you qualify. We'll make you an accountant. Hey there. All right, if nobody has any other questions, I'm gonna we're officially filing tax returns, folks. I think we submitted our first tax return today. It wasn't you, Susan.
Mine's not ready yet.
I know. All right, everybody. Thank you. Thank you, Belle, for attending. And I will talk to you all soon. Thank you. Subscribe to the YouTube channel. Yes, Lee, we can monetize that. I knew there was something involved. All right. Thank you, everyone.
Good job.
Thanks, Joe. Bye.